Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, first day of December. So let's dive into it. And as a reminder, if you're new here, please run your video player at 1.25 to even 1.5x with no loss of clarity and help you get through the material quicker in the morning. Anyhow, let's take a quick look at markets. We got a pre-market rally going on. Bitcoin basically flat. Oil's up 4.5%. Gold 0.6. Copper 1%. Large caps 1.25%. Nasdaq 1.5%, and small caps up 2%. And it's 7:12 as I'm starting the video. Over in the macro front, not a whole lot. We've got ADP. But we've got part 2 of Jay Powell on the Hill. I don't know if Yellen's going to be there for that one or not, but potentially she may be there. Earnings tonight, got some big names. We got CrowdStrike, Snowflake, Okta, Splunk, Five Below, PVH, and Elastic. There's a few other ones you might want to check the calendar on the blog site. From last night, Salesforce, CRM, is down about 6% this morning. Ambarella, however, is up 17%. So those are going to be some names you want to add to your bracket trade list as we get all this gapping action, not only from the indexes and FATMAAN names, but also these names coming out of earnings. And we've got quite a list going on. And as you prepare for today in this rally, we may be rallying up into some of those overhead gaps. So have your alarms ready, especially if you're somebody that wants to trade those gaps. Let's just talk about yesterday a little bit. Jay Powell, I don't think it's any coincidence that after he gets reappointed, now he's this big hawk, right? Everything was transitory. Don't worry about inflation, blah, 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 blah. And he gets reappointed. And now, we need to get rid of the word transitory. And by the way, we might double up on our withdrawal of liquidity. So that's what I think yesterday it was all about. Fed policy and not the new Omicron, the new variant. I think that is a red herring. I don't think. The media is making it sound, real dangerous and all that kind of stuff. I think the market is, unless something comes out that this thing is super deadly, but I don't think that's going to happen. I think we've got these new oral treatments. There was I think it was Merck that has their oral pill at the FDA. It got out of committee, so now they're going to vote on that, give it permission to go into production and be widely available. So the therapeutics are coming along. The vaccines are out there. And the person that discovered it in South Africa said the symptoms are very, very mild. So I think the variant activity is overblown. We'll just have to see how it works through the markets. But I think yesterday was all about Jay Powell. So let's get into the charts. VIX, we said there was a resistance band between 29 and 30. We went up there yesterday for a touch, closed off the highs, and now this morning we are trading 24. So this morning, keep your VIX on the board, in your little watch list, and keep an eye on it for trend, right? If we continue to go lower and the rally continues, then that's a green light. If you see the rally be green and you're also seeing VIX be green, that should send up a warning flag. Why are people running for protection when the rally is proceeding. So you want to see a directional trend on VIX down while the rally proceeds, and an early warning flag that something's going on would be a green VIX right alongside that. And we move on to the Mcclellan Oscillators. What can I tell you? They did their job again, like they always do, right? So we talked about yesterday, we are in the minus 55 range, and we said that, you know what, if they pull the rug today, we can go lower, but then you're really on borrowed time. So hopefully, if you were a person that had engaged with puts and you watched that midday market update that I sent out yesterday, I don't know, around noon or 1 o'clock, whatever it was, start covering your shorts. Now, whether you went long or not, I can't tell you, but when you get down below 60, that downdraft is on borrowed time, and you see the violent reaction that we've got right now to 1.5% to 2% up move in the pre-market. That's what happens when you get so stretched to the downside on that big rubber band. When that thing releases, you get that slingshot effect. So I really want you to incorporate these oscillators into your own personal work. I mean, as long as you're here with me, I'm not going to miss them. I'm always going to let you know. But just for your own, study and development, I mean, just go back in time and look at all the reversals that happen along that line. And I think it will help you to, if you're a person that gets both long and short, when you get up to the top, that's time to start peeling off some of your overweight longs and possibly get protection, because it reverses at the extremes on either side. You see that here, all the reversals across the top and all the reversals across the bottom. So those worked like a champ, like they always do. So moving on to the SPY 2 hour, of course, we said that we thought the 50 EMA was going to contain the downdraft, undercut it a little bit on the close, went down to touch this gap. But now, of course, we've got we're going to have a gap opening. So just go back to our basic principles. You're going to have, in most cases, a gap above, and then you'll have a gap below. Time will tell, but you've got to be prepared for more or less a gap and go higher, or an opening gap that gets faded back down to close the gap. But since the pre-market is so strong, it may prove to be worthwhile to keep your antenna up for a downside fade if you are a person that likes to trade that. Now let's just take the another scenario. Say you're not really interested in all this intraday stuff, and you're more of a position trader, and we know we've got a gap below price when the market opens. If you get the down move to fill that gap, and you find that the prior lows or at the 50 holds on that gap fill, then that is a very, very, very objective location to get long with some duration with a stop just below, because then the technical event of filling that gap will have been completed, and So then you'd be down in this range, adding to, or creating a long position. And you can do that on any of your stocks, not just the indexes or FATMAAN. If you see there's a gap this morning below price and it goes down to fill that, then you can use the prior low, a stop just below that, to get long. So anyway, I hope that helped. Just moving on to the SPY 30-minute chart. You know, we're gonna gap up in here somewhere, and then the gap will be below, and then we've got room to the upside. You see we've got gaps above here as well. We've got a little downtrend resistance line that'll have to be overcome. But to get the super duper all clear, you've got to get above that breakdown candle of yesterday, because what can happen is you get the rally, but then it gets right up to the moment of truth, and then they fade it. So as you know, if we get a gap and go situation where we gap higher and then, you know, run higher and then hit that wall, but that wall cannot be scaled, cannot be broken through, then you've got to really stay on your toes to the potential for a move back down. I don't really feel that, but, you know, everybody's got feelings. You just got to follow price. And I'm just saying, like, for instance, on SPY, this 464 would be a perfect place to fail. If I was looking at it technically, that would be the line that I would really have on the radar screen. And then if it can break above, it'll fill this gap and then make a run up to this bigger gap above. Qs, same idea. I've got a pivot here at 395. Of course, we're going to gap higher. What you really want to see on the Qs is this breakdown candle high at 401 be taken out. You break above 401, probably going back to the prior highs, you know, over the next few weeks. If it gets up here to 401 and stalls out for a few hours, be careful. Be careful. That would be a place for this to fail. Qs on the 30-minute chart, you just see the granularity. I think this is actually closed. I mean, it's less than 50 cents. So they didn't quite close it all the way, but you know, it's there. But I don't think the market gods are going to say, "Oh my God, we got to go back and fill that 50-cent gap." I'm leaning to the upside today because of the oscillators, but you can't discount them coming back to fill the opening gap. IWM. This is the one we've been worried about. We got the move down. The 200 held. So for today, that 200 is going to be your line in the sand. And that location is 218. So, you know, we're going to be up 2% if the pre-market holds. And then see if we can get a push up to 226, where this gap is this morning. Here it is on the 2-hour chart. Just gives you a little bit more granularity. I don't think there's a gap here, or I would have marked it. If you look at where these wicks lie, I don't think there's much of anything there to worry about gap-wise. I did want to show you on this 30-minute chart the bullish divergences that came into play yesterday. Let me show you. We have a low, and we have a low in PPO momentum, and we have a low in RSI, correct? We bounce, but then we make a lower low with price. Yet momentum is higher, RSI is higher. That that is bull divergence. When you have a lower low in price, but higher lows on the indicators, that's a bullish setup. Now price has got to move, but that's a setup for a reversal. And, we got a little one, but now with the 2% pre-market move, that'll look a lot more dramatic. So when you're plotting these time frames, always look for those bull and bear divergences to give you an early heads up that a trend change is more or less likely. Now you got to get it confirmed with price, but if you were short IWM, at any point, and you saw price coming into support with bullish divergences present, your conclusion should be that, staying in this short, I'm on borrowed time. So when you see that, that gives you an ample opportunity to get out of the position. Facebook, rough day, down 4%. Had a big move down, little flag, came down here to 324. 324.50, I guess, is where we're at. I'd use 324 as your pivot. I think anything north of 324 is bullish. And this looks like a really nice setup from the standpoint of, we tested these lows that held. The market is boldly green. I think you can be long against 324, and then I've got all the overhead resistance levels marked. Apple, star of the show, breaking out, almost taking out the all-time high. This wick is just a little bit above. But I think you can stay long against this 164.75 level, and then look for blue sky. If price makes another green bar and then it comes back and drops below this 165 area, be very afraid, because we've got bearish divergence. See that? I don't have it drawn in here, but we're at basically an all-time high. And right back here, look at how high momentum was. Look at how high RSI was. And now we're right back to the same place, but with momentum and RSI at lower levels. So, that's a yellow flag. And what would trigger it into a red flag would be a green bar out of the gate and then reversing it and bringing it back down into the range. That is a time where you've got to say to yourself, that sucks, I'm wrong, and I'm getting short, because that would be a very bearish move. Tesla, nice outperformance. We had a big red day yesterday, and this was up 0.7. You can see this 1120 line has been nice support for quite a number of days. I'd use 1150 as your pivot, or if you wanted to, you could wait for the breakdown candle high right here at 1165 to be taken out. If you take out 1165, I think the door would be open to make a run at this gap at 1200. So one more scenario, there's a red bar that comes into 1120. That would be very objective, because you've got all these support touches. The bears have not broken it. So if there's a little opening weakness into 1120, that gives you a better trade location to get long, and then you put your stop just below that. Microsoft, rough day, down about 1.75%. I think here are your resistance levels, and here is the line in the sand that has to hold 330. If we get weakness and you come down to 330, I would be a buyer there. Or if price recaptures 332, I would be a buyer right here. And then you've got your overhead resistance levels. Definitely, you need to be long above 338. That opens a much easier path, but we've got some well-defined lines of resistance right here. I mean, if you wanted to get long at 338, 332 is, $6 better entry point. So kind of decide what your time frame is and what you're trying to do, because I wanted to show you, and I showed it yesterday, but it's a good reminder. You've got a massive level of importance here at 330, and anything below 330 that sticks, you got a lot of downside here down to 315 or so. So I think there's going to be a lot of buyers right here at 330 to hold it. And if you're wrong, then you got a paper cut and you flip short on Microsoft, because I would imagine, if 330 breaks, then you got a lot of red in other places too. I don't think they're going to go after Microsoft individually. Amazon down 1.5% yesterday. I mean, a lot like Microsoft that we just looked at. We were at the bottom of the box. We had 5 hours worth of candles where they couldn't break 3,500. Support here, support back in here. If you're an Amazon person, be long against 3,500 with a stop just below. Be patient with it. I think if you get that move up past 3,530, then you're going to go to 3,600, I believe, in a heartbeat. So I actually looked pre-market, and it's not up very much. So I think you've got a good chance of getting a pretty tight entry down here at 3,500. Google. Closed on the lows. I think your pivot point here is 28.40. If price comes up, we're below. I didn't see where it was in the pre-market, but if you get a break below and then a recapture of 28.40, I would be a buyer there. And your first little sticking point is going to be 29.60. You break that, then I think you're going to be well on your way. And the triple green light, however you want to put it, is recapturing the breakdown candle high and then taking out 29.30 resistance, which is right there. Once you do that, I think you're going to go back up to 3,000. Netflix, man, look at how they liquidated that yesterday. Got the touch of 675. If any of you got that, that was an awesome trade. Nice job. What were the clues? Well, you knew 675 was a very important level. Why? Support, 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 resistance, resistance. You had a tag here, and that was the first bar of the day that went up to 675, couldn't crack it. The next bar made a move to 675 and couldn't crack it. So you had 2 hours to say to yourself, I don't think it's getting through. And if you had taken a short position with a stop just above, that is as objective as it gets. You are at an important line of support and resistance. Price could not get through on consecutive bars. get short, stop above if you're wrong. You could not have anticipated this, but you got to be in it to win it, right? We talked pre-market about this flag breaking. So say you missed the entry at the top. Once it broke 665, that was a sell signal. Once it broke 660, that was another sell signal. And so down we go. So this morning, I don't think you try down here at 640. What I'd rather see you do is watch this 646 get reclaimed, and then I think you're off to the races to the upside. Semis, big liquidation bar, but look, the top of the gap held on multiple candles. Now, I think you can get long either against the gap at 303 or buy the breakout from 307. And if you break above this level, 307, then I think you're going right back up to 312. And that would certainly be a nice trade to take. And then the super duper all clear is recapturing the breakdown candle high at 312. And then from there, you're going back up to 318. So, big picture, the oscillators were stretched to the downside. That was our cue to, exit any tactical puts or protective puts that we had to monetize them, position for a bounce. And so we're getting that bounce this morning. The most important thing today is finish green, finish boldly green, right? If we see a move up that gets faded back to the lows, that's going to be very telling. I'm not expecting that. I think the market is going to come to terms with this inflation and the Fed deal. And I think Omicron is a total red herring. I would not worry about that. I don't think it's going to be any worse than what we already had. I think the media is going to play that up a lot, but I would ignore it. Honestly, we're not going to go back to lockdowns or anything. And the 4-day weekend, the Thanksgiving weekend, was highest gasoline usage since before the pandemic. So people are getting out and about. Coronavirus be damned. We're going to have dinner together. We're going to do stuff. We're going to go to football games, all that kind of stuff. I think people are getting back to normal, and they'll deal with COVID if they have to, either by getting vaccinated, getting checked, or getting the disease. But I don't think anybody's going to be locked down. So let's watch that price action today. I hope you did well yesterday in that downdraft, or at least held your own, held your trading psychology at a place you want it to be, rather than going around with your hair on fire. I think the plan yesterday, for the most part, worked really well. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.